Hi everyone, thanks to coming to this panel. It's titled as Speculation Build Crypto, but Can Utility Sustain Through the Next Decade? We have a pretty stacked lineup here, so how about having every guest to go through and tell us what you do and what your company focus on?
Great, it's great to be here. Dave Sedacca, I'm with Polkadot, so I lead a division called Polkadot Capital Group. It's not necessarily just to attract Wall Street on chain, but really to educate non-cryptos users around how Polkadot fits into the asset class and how you think about Web3 and the sovereign identity on how that operates. And I also sit as the head of finance within the labs company behind Polkadot, so it allows me to really get to see how developers think, talk about product market fit, etc.
Cool. Hey guys, I'm Matt. I work at Magic Eden Foundation. And Magic Eden is a product builder, and we build speculation products like casino gambling products. We build, we're going to be launching a prediction market product. And we started in Web3 launching NFTs back in 2021 and saw that wave and learned a lot from that. And that's going to color a lot of our views on the market and how we see crypto in the world.
Good afternoon, Germán, Soto, Sanchez. I'm the Chief Product and Strategy Officer for Broadridge Financial. And we don't build speculation products. We're a global fintech, S&P 500 company, and we focus on providing vital financial markets infrastructure. So we provide basic plumbing that's critical for making financial services run. We do that for wealth managers, asset managers, capital markets firms, corporate issuers, and so on and so forth.
Hi, I'm Leland from Succinct. At Succinct, we build a ZK VM. It makes it very easy for teams to build ZK applications. What that means, I know it's a lot of buzzwords. We basically make it really easy to build privacy tools, and we work really closely with many rollups to build ZK rollups for them. Myself, I'm the ecosystem lead. I work with a lot of our early stage partners on what it's like to build with ZK and what can it enable.
Great. I forgot to introduce myself. I'm Denning. I'm research director from Pantera Capital. We're a early stage venture capital, crypto fund since 2013. The first one was Bitcoin fund, but now we're looking to all kinds of ecosystem. And we have a pretty wide range of ecosystem and operators here today. I want to start a panel by defining a bunch of components in the title, right? So what are we talking about when we talk about speculation, and what are we talking about when we talk about utility? And I appreciate that, Matt, you kind of took a stand on setting up some fire here that, saying that Magic Eden is building speculation product. And so how about we start with you? Tell us some story about what are you been observing in the industry? What are some moments that speculation really spiked up? And what are the type of thing that you're seeing really isn't a real product market fit signal, and sometimes they actually sustain?
Yeah. Great question, great setup. And I have a very biased view after seeing all the product building Magic Eden's been doing over the last 4 years. And like I said, we started with NFTs in 2021. And the lasting behavior with NFTs, because we built the marketplace, we built all the infrastructure, we built on 12 different chains, which is very, very kind of tricky to do. But the lasting user behavior was purely speculation on trading these assets. And really funny story. We started building, your typical trading exchange, but then we layered on interesting, fun products that felt more like entertainment. One of them was called Lucky Buy, and Lucky Buy essentially lets you buy an asset for a fraction of the price, but that's also the chances that you have of getting that item. So you spin a wheel, and that product powered 20% of the business without us doing any marketing. So it's really funny, and I say that story because we built this giant marketplace, and it was essentially the biggest NFT marketplace in the world. But our users sought out this gambling behavior, right? And it was great for us, and we're learning a lot about our users actually just want to speculate on assets. That's really, and that colored my personal view too on crypto. It's what's the most lasting use case of crypto? Over the last 10 years, it's been speculation, and I think the next 10 years, it's going to be speculation. Perps products, DeFi, a lot of it is just speculation behavior. So that's what I'm. I mean, that's sort of what colored my view.
I hear you. It's pretty refreshing take because it's like basically say let's not discriminate what the demand are. Just build whatever what people want.
People want to gamble. Yeah.
Yeah, I see.
Wait, so
Leland.
Matt, tell me, what's your favorite gambling or speculation tool that you personally use?
Oh man, it was actually Lucky Buy. Yeah, but like, actually now it's our new blackjack product. Because at the end of Q1, we're launching a full casino, full regular. It's gonna be incubated by the team. It's not gonna be Magic Eden. It's gonna be separate entities, separate teams, separate, entirely different product, as it should be. But we, over the years learned that, people actually want the pure form of it. And now with the advent of the pure form of speculation, which is this casino behavior, and now with the advent of prediction markets, I think people are just normalized to, gambling behavior and wagering. And I think people just, they could wrap it in a protocol and call it prediction markets. But man, like, let's call a duck a duck. It's gambling, right?
I want to pull it back a little bit though. Like,
Sorry.
would you agree saying like, like pure speculation definitely have the damage in terms of like people are, like doing 100x leverage, perp decks and losing a lot of money. And like there's insider trading from all the meme coin launching and even, the Trump coin. And it seems like a little bit like a grift to me. And this definitely has been negative side just to allowing all kinds of speculation going on. Would that be like agreeable with you guys? Or you're like, just purely agnostic, like build everything?
I will not hog the. I have views, but I'll let my co-moderators have their takes as well. I think I think you guys know my take at this point.
Okay, cool.
Yeah, I do believe that there will be utility that comes out. It's not always going to be speculations for the next 10 years. If I look back at the early days of Polkadot, Gavin Wood, pioneer in the space, co-founder of Ethereum, wrote the Solidity smart contract language, constructed the EVM. We launched parachain auction slots back in 2021. People locked up tokens with conviction for 2 years. However, what happened after that in 23, 24 is that we didn't see the user adoption. We didn't see the product market fit. And we saw that, people end up selling the tokens, right? But again, when you're first to market and you're first in a pioneer in the space, you're gonna see this speculation drive these innovations up. But now what we do is it's a learning exercise. And I think that's what we're all seeing now is that protocols are starting to pivot to understand what's important and how do you think about taking this technology and building back value accrual into the underlying token. And that's something where we've lowered barriers to entry, commoditizing block space, allowing people to contract with stable coins in the ecosystem, not requiring the native token to do these things. So again, speculation, of course, will always be there, but I do believe that we actually will start to see use cases. We'll talk about that more throughout the panel.
Yeah, and I think it's really healthy. I think it's very necessary, as we think about speculation, for a company like ours, right? We don't get to things until they're proven, until they're stable, right? And so from that perspective, speculation is healthy because it gets things to that point, right? And so without it, it would be very, very difficult, I think, for a lot of more traditional players to engage.
Yeah, actually, I want to follow up on that. Particularly, Germán, you're coming from, institutional customer as your base, and so curious, what are the interest coming from them that's picking up? Like, I understand, like a lot of them are, buying into ETFs, and what are the other, type of speculative assets that are now kind of accepting?
Yeah, it's been really interesting. I would say the last year has been a significant inflection point,
Right.
and even more, the last 6 months have been an inflection point. If you talk to a wealth manager, for example, now you're seeing wealth managers, I would say 6 months ago, they were scared to deal with anything related to digital assets for fear of the fact that there's no regulatory clarity. If they advise somebody to invest in digital assets to lose all their money, that they're going to get sued. I think now you're seeing sort of a much more openness, and you're seeing wealth managers saying, hey, we need to offer these products to our clients. We're also seeing the same kind of openness, and actually asset managers are way more in the front versus wealth advisors. We're seeing broker-dealers saying, hey, we need to facilitate this for our clients as well. And so we see a lot of momentum picking up. A lot of these folks don't know what to do. So if anything, we want to engage. We don't know what to do, but we want to engage, which is extremely positive.
What is the real like crypto utility to each of you guys in terms of what you're building?
Yeah, I think what I talked about early on was that, the original infrastructure of Polkadot was to make the blockchain of blockchains. But what we saw, we've had amazing companies come out of that, Centrifuge, Peak, BitTensor on the Polkadot network. But again, that value accrual to the underlying token just wasn't there. So, and Polkadot was the most inflationary token. We had the highest staking yield. But at the end of the day, it's probably not the most positive. So we're taking that back. Next month, we're going to be capping token supply. Staking yield will come down about 6%. Bonding on stake will move from 28 days to 2 days. And we're going to be building on what we call the social application layer of Polkadot to really bring back the value to underlying token through products and other use cases that we'll talk about in a bit.
So, excuse me. I think the main utility of crypto from my lens of like a consumer product builder is actually the experience of using crypto and having fun, actually. So fun is the utility in my perspective, from a consumer's perspective. And I say that because, if you look at the world and you look at the iOS App Store, for example, more than 50% of the revenue of the iOS App Store comes from apps and gaming as well as entertainment. So there's always going to be a use case for consumers to want to have fun. So I think that's the core utility. Now, can you create an avenue for institutions to come in, individuals to come in who want exposure to this model? Yes, you totally can. Because a casino model is actually, and being the house is actually very attractive over a long period of time. You know this model is going to win. So what kind of protocol innovation can we layer on top of that? You could kind of think about it like hyper liquid vaults. You could let people be the house, give up our house edge because we frankly don't need that edge, and you could let people invest into this pool of capital that returns yield, and they could actually put their capital and be the house themselves. So that concept is interesting, and I think it's something that we're going to be developing, working on to let institutions and the broader ecosystem have access to this model, because I think that's like that's the thing with crypto is like you want a really open ecosystem, and the actual utilities letting everybody have access to this model, which we think is really attractive, and in the meantime makes a really great business.
The way we think about it is two words, right? Efficiency and velocity, right? When I think about efficiency, the stat I like to go to is it's 850 billion. That's how much is spent on sort of tech infrastructure by financial services firms every year, right? So the efficiency that's going to come to that figure from, utility, it's going to be pretty massive. When it comes to velocity, the figure I highlight there is 230 billion, right? That's how much there are in assets that can be used as collateral, on a global basis, and 25 billion is how much actually gets used as collateral. Right, so you have about 90% of collateral that is tied up, it's not used at all. From a velocity point of view, this is going to unlock that. And once you make that collateral available, you're going to have much more velocity, much more efficiency, and much better capital markets as well.
From the Succinct side, as an infrastructure provider, we like to think our product provides utility for our users, otherwise they wouldn't use it at all. And so as a ZKVM, the majority of use cases we see for our product is actually for securing rollups, which doesn't really matter what the rollup uses, what people do on the rollup, but they're using us to secure the network, which is why today we secure over $4 billion in assets. But there are definitely more speculative use cases of our technology. So for example, people have built verifiable lotteries on top of Succinct, which means that the lottery mechanism is provably fair, provably random, so they know that the house is not secretly cheating on them. So that's a fun, more speculative product that people use for technology. However, the bulk of the users are more infrastructure, more roll-up related, more quote-unquote utility driving.
Would you categorize the utility that Succinct is building as privacy tech or verifiable or trustless, or curious how you define it?
Yeah, we categorize most of our technology as providing more verifiability. It's can I verify that the auction was executed correctly? Can I verify that the lottery was run fairly? Mm-hmm. Yes, there are also like privacy crossovers too, but it really depends on what your needs are.
Okay, so my personal experience here is that like we're seeing so many more AI content and like images going online. Like, can Succinct help with like say verifying this is a human-made picture rather than?
No, that's a great question. So I think what's really, really fun today is like seeing is no longer believing. So let's say you go on Facebook, you go on Instagram, you go on X, you see a photo, and you're like, okay, like is this real or not? And some major platforms actually will now label AI content, which is really great. So Meta, TikTok, they do this. But they will only label AI content if the image generation platform has a watermark. So if they don't have the watermark, you actually don't know. And so you go on these platforms, you're like, okay, everything's fake, internet's dead, I'm just surrounded by bots everywhere. And so the question is like, oh yes, can we use ZK to like fix this? And we actually have a solution for this. Inside a phone, there's a special hardware device called the Secure Enclave, which stores biometric data. But you can also use a secure element that's digitally sign a photo. So if you have a photo that has a signature, then you know it's like real or it's captured by a real photo. Or sorry, by a real camera. And so this is what we're doing. We're trying to like prove what's real, bring authenticity back to the web. But that's a great question because everything is fake.
Yeah.
And I can add to that. I think from an AI perspective, something that we've been developing in-house is what we call proof of personhood, right? I think when we talk about iris scanning, biometrics, I think we're just giving away too much of our data, and it's just out of our control at that point. But there's certain points in time when, okay, you do need that permission, AML, KYC, where they need to know everything about you. But at the end of the day, most of this infrastructure, you just need to know that you're human and how you're operating. And I think that's a core primitive to what makes kind of what Polkadot would be special and what we start to think about as the social operating system layer, right? Thinking about this entire ecosystem of widgets that you can plug and play. So you have a universe of gaming and DeFi and having the identity in the background.
Yeah, I want to zoom in on one example here related to how different ecosystems are allocating fundings, or how basically different apps are bootstrapping their adoption using speculation to like increase utility. So like obviously any apps, like there's a playbook. If you're launching on a blockchain, you kind of like add some token incentive to attract liquidity. Then you have this TVL metrics going up, and then now you can like basically talk to people, be like, hey, use our protocol. I'm curious, like oftentimes we see that like once the token incentive is gone, all these money are gone, and also the people you attract are kind of like the wrong people who are just farming. Do we think it's kind of like a wrong approach the industry has been taking, or not really? Like maybe I'm curious if I want to think it's like you can always constantly kind of like governance it through like some speculation incentive. Curious everybody's take on this one.
Yeah, look, I think TVL is it's a nice and rosy metric that's on a page, but at the end of the day, if you wipe away all the incentives, TVL will just go on the chain that they have the best relationship with. Look, all this off-chain liquidity that needs to come onto a blockchain, someone's going to raise their hand, that company is going to make 10x what they really need to be making because they're getting paid to put that TVL on there. And I think what's important from that point is that we think about how do we create more defined grant programs versus this speculation, because I think a lot of ecosystems have tried to get people to kind of build and incentivize them, but I think we need to really relook at the VC model, the grant model on backing real utility, and it comes down to what SaaS products look like in Web 2 today, right? How do I think about daily active users? If I look at my iPhone, I look at my screen time, what are those applications that really get people excited about using on a daily basis? And those are the metrics that will matter. And then we'll build on top of that.
Yeah, I think having gone through, before the foundation, I was at Magic Eden, the labs company, and we didn't have a token for a long, long time. So we built that business with like millions of users and wallets without launching a token, so no incentives embedded in the product. And I think, the model of today of bootstrapping a lot of activity with just liquidity incentives, it actually, I think people look down on it too, because it's users are very mercenary and they just hop around to wherever they could farm. So there are definitely downsides, but after we launched the token, one really interesting thing is because we already were a product builder and knew how to build sticky products, we launched a wallet, and we had an installed base of users. And of course, we added incentives to the wallet, not an insane amount, but enough. And immediately, that wallet, because of our installed base and incentives, it was like a business with millions of revenue and top line. And we were like very excited about like, oh wow, this model does work. And then because the issue with the model is people don't know how to retain those users. But again, through years of building sticky products that users kept coming back to without incentives, we knew how to retain them. And for some builders, it can work. But I think the key piece is you have to know how to retain those users once they are on your platform. And that's actually extremely hard because in crypto, people, again, are just very, very mercenary. But again, look, this is from the perspective of someone that has seen just consumers want nothing other than a way to just speculate on stuff. So again, that's what's coloring my view. But I think that behavior is very enduring and lasting, and it's going to keep going. So yeah, bullish on incentives.
I have a personal story to share, actually, echo on that point. You can attract and acquire people with maybe some speculation incentive, but also you need to build a good product to keep them there, right? Like, so I downloaded Magic Eden wallet because I was like trying to check my like airdrop, and like that was a great strategy because like, you can only check your airdrop if you download the wallet.
Yeah.
That was the case, and I keep it there on my phone, and it's the only crypto wallet I have actually because it sends out a notification whenever there's transaction in my wallet, and that actually helped me flag a like hack that I've been through. So it was crazy. Yeah.
Amazing story, and proves my point. It's like
Yeah, exactly.
we kept you.
Yeah, exactly. Curious also you guys take on this.
Yeah, look, I think that there's a very much necessary aspect of growing your network that sort of providing incentives addresses. I think as long as it's done the right way, meaning that this is all about game theory, right? And from a game theory perspective, you have a user that's trying to optimize sort of what they receive. Over time, there is an inflection point where the rewards have to decrease, right? And you have to transition to generating loyalty through actual value that is created by the network. And so one thing about it is as you give out the rewards, every user that receives a reward should be contributing something that grows the value of the network. If you can't answer that question, what value are they bringing to the network for the reward they received, then basically your incentives are wrong, they're off, and it's not going to be long-term sustainable.
Definitely, like all companies, even like traditional companies, have some form of incentives, whether it's like direct, like giving money to users, free trials, discounts. But fundamentally, you said you need to have like a real product to sell at the end of the day. Because everyone in crypto thinks they're really good at BD or marketing because they're actually just like giving money to people. Like your user metrics are so great. For us as Succinct, we actually did very little incentives. I think it's more as a B2B product. We've done a lot of work of trying to produce something of value to customers and persuading them that they should use our product while doing like very minimal incentives, which has been like good for us. Because incentives can tend to be like a zero-sum game. Everyone keeps on like throwing more money, and you're like, okay, why are we doing this?
Do token today have utility? Curious. Like, also, what are some good examples you guys can like bring up with like a good token with utility? I'm curious.
Excuse me. BNB is a good token with utility.
Okay. What do they do? Sorry.
BNB.
Yeah. Yeah. I mean, it's a gas token on the Binance Smart Chain, but also I believe they might have some like incentive with like the market maker deal, or particularly what do you mean?
Yeah. So you could use BNB to get discounts on the platform. So I think it's just like your traditional exchange token. And a lot of the exchanges out there, global exchanges, have the same utility, which is you use this token to get discounts on the platform. If you're a large market maker, large institution that holds millions and millions of this token, then you get access to special VIP tiers, and that's very attractive for trading on the platform. So that's one big utility. And when we designed our token, we thought of it very similarly, because we were a long-tail asset exchange, I like to say, because NFTs and these are just very weird tokens, right? And so that's the way we thought about designing ME token, and that's the way it acts today. You get access to discounts by using it on the platform, and importantly, I think the the most important utility that any token can have is value accrual from the network to the token holder. BNB is a good example of doing this, and our token does the same as well. And yeah, that's the gold standard in my opinion.
Yeah, I think from a Polkadot token, I spoke about this briefly before, but when we moved away from parachain auction slots, we moved to a commoditizing block space. So if you're a parachain building, you buy block space when you need it, and you can buy more block space during high peak seasonality or offload that, right? And then I also mentioned this social operating system. The way I think about creating a better non-crypto native user experience is abstracting as much of this layer as possible. So if I think about different applications, widgets, whether it might be chat or trading or gaming and all that, it allows people to transact maybe with stable coins, but behind the scenes, you need the underlying DOT token for that. The validating the network, I think it's still important and maybe underrated is how secure a network should be. And I think about security as Polkadot, and we have 500 plus validators on the network, and you need the underlying DOT token in order to secure the network. And I also think about incentives. I think incentives will be helpful. And in this operating system, I could see peer-to-peer incentives through these applications to incentivize people with the underlying token, whether it might be a over-collateralized stablecoin that Polkadot network might come, but it all comes back to the DOT token that secures the foundation of the network.
Yeah, I would just highlight, for example, we use the Canton network, and in terms of that, I sit on the board. We spend a lot of time thinking through sort of how to align the incentives and rewards to network activity, and by the way, we go back and we look at that, right, from the perspective of our rewards that are going out to the returning, value to the foundation, and so I think that's something that I think it's really good. Obviously, we're believers in that. We lock about 400 billion per day on that platform, and so we think it's something that's representative of, from an institutional perspective of a public but permission network that sort of hits all the requirements for us to feel comfortable.
Maybe perhaps like a Mimi example, like Bored Ape Yacht Club is a good token because it's a Veblen good, meaning it confers social status, and also it's like an access token to events. That was more of a joke, but.
Okay, cool. Yeah. I think we're almost at time. I'll just extend a little bit to have everybody tell me, like, what's the signal today you see that make you believe that crypto is going to matter in 10 years? Obviously, we're in a kind of like down bear market, but I'm sure like there's a lot of signals. I'm coming out of this panel more bullish. I'm curious everybody's bullish signal here.
Yeah, I think obviously there's been a lot of speculation. I think mindshare has always been around trading in perp dexes, and that was the only use case for blockchain technology. But I think we have to take a step back and look at, okay, this infrastructure is going to be used for a lot of things, so it's essentially a supercomputer. And I think the resiliency of this infrastructure, it's going to be important to think about execution. On Polkadot, you can get 500 millisecond execution eventually. Finality. How do you operate on this as the internet layer? And eventually, this is all going to be abstracted. It's all going to be about blockchain. Are going to be power, not only trading, but money transfer and messaging and decentralized storage. It's going to be an AWS competitor in 10 years' time.
Yeah, and on the flip side, and in the meantime, I think speculation as a behavior will continue to grow. And the signal that I like to pull is prediction markets as a category and the amount they've grown over the last few months, even last year. They're doing an annualized 200, 300 billion of volume, and that's a lot more than the traditional casinos, sports books do today. And that's just in a matter of a year. And if crypto rails can unlock that type of activity, I think we're going to have a lot more users come in and be able to use the infrastructure that's built today.
Yeah, for me, it's 55 to 60%. So we do a digital transformation survey every year. We interview about 1,000 companies on a global basis, large, traditional finance companies. About 55 to 60% of them said that they were increasing materially their investment in digital assets and tokenization. That number is up from less than half of what it was a year ago. So that's a pretty significant harbinger, I think, of what you're going to see going forward.
Yeah, I think why we're excited about crypto in the long run is it's the only way to have scarcity in a digital world. I think our view is like AGI is going to happen in 5 years. The AIs need to send money to each other. We need to have some sort of scarcity. So we need crypto to solve that.
Cool. I think that's it. Thanks, every guest. Thanks for the answer, and thanks for coming to the panel.